Morning, Steve here in Chicago with the morning grain comments. Hope everybody has a nice weekend, safe weekend. Overnight, grain prices are moderately higher. Yesterday, we had some pretty good fun buying led by the beans. Corn and wheat market gave back some of the session gains, but basically in the soybean market, what we're seeing is concern about dry weather in southern Brazil and eastern Argentina. It looks like at least 2 weeks of continued dry and warm weather there. We're also watching pretty closely any news about China buying more U.S. soybeans, maybe because of the dryness in South America. We did see one group come out yesterday with a lower soybean crop estimate of this year's U.S. crop, below the average trade guess, and a carryout that is also well below the average trade guess, and that tightens up the U.S. Soybean supply and demand picture, and probably suggests that, here we're at $11 January beans, we probably could go higher. The low supplies of Brazil and Argentina old crop soybeans is continuing to help the soybean meal futures, and we also noted that sun oil supplies worldwide is limited. Palm oil production tends to go down this time of year, and that's helping soybean oil futures rally. And there was even talk yesterday that some people feel that it's tight enough that soybean oil futures may trade over 40 cents a pound on the futures. Over in the corn market, this same group lowered their corn crop estimate below the average trade guess. They raised exports, and they have a carryout now at 1,700 million bushels versus the government's 2167 and the average trade guess of 2033. So while the corn market is a demand market and is slow in pushing higher, it doesn't have a lot of resistance over the market, and now that we're trading over $4, I think there's a higher objective in the corn futures also, especially as U.S. harvest ends. Again, China has to come in and buy some U.S. corn, and we think that the World Board will finally increase their China import number to 22 million tons from their current 7 million tons. Over in the wheat market, still mostly a weather market, dry in Russia and Ukraine. We'll be watching to see if any of those countries put some kind of export quotas on wheat. Europe may not ship as much wheat as they have in the past because of their low feed grain supplies. They may have to be forced to feed more wheat. And then we continue to see mostly dry pattern across the U.S. Southern plains. And so with only 43% of the U.S. winter wheat crop rated good to excellent, that rating could actually decline, especially in the hard red winter wheat areas. So we kind of have to watch that and see that now that we're trading over $6 in Chicago, December wheat futures, if we're going to put a more weather premium on the marketplace. We're still dealing with increased COVID cases and the impact it might have on food demand. We'll be watching any more stimulus, either from the Fed or the central banks, to try to help the economies along this continued slow pace. And then also we'll be watching pretty closely the political events that are occurring with Vice President Biden closer to a victory, but President Trump saying he will go to the Supreme Court and make a decision on the late counted votes. So all this kind of keeps the market volatile, but it seems like there's enough friendly news underneath the grain markets to support the grain markets and even move them higher. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.